Welcome back to another episode of 2 Minute Tuesdays. I'm here with co-founder Jack Martin today, and we're going to talk about why quality and why location matters so much in mobile home parks.
Yeah, this spins off of a conversation I had with a close investor friend of ours, and we were circling back to the great financial crisis, 2008, 9, 10, 11, and we were thinking about what really mattered with respect to assets that you were exposed to during that stretch. And what became really evident is that if you owned real estate out in the middle of nowhere, you were in big trouble. Yeah. And if you owned poor quality real estate, even if it was well located, you were still probably in big trouble. You know, specifically when you think about mobile home parks, and I'm aiming at the high quality real estate that we've assembled for Fund 3, you know, this is downside protection, and it really comes down to execution. So you think about ability to raise rent in a difficult 2008 through 2012 environment. If you're not well located and you don't have high quality, you can't execute the rent raise strategy.
Can you talk to why we're picking the markets that we're picking versus what maybe less sophisticated or less experienced operators might be choosing today?
Yeah, I think kind of look at total loss. So if you were to experience a natural disaster and it wiped out all of your homes, could you replace them in the location or the market that you're in? That really comes down to median home value. So there needs to be a delta between the cost of a mobile home and the cost of a single family home in the same marketplace. Otherwise, the all-in monthly payment that a mobile home park resident would be paying is not substantially lower than they would if they were buying a single family home in the same neighborhood. So the wider the delta between a single family home and a brand new mobile home in a mobile home park, the easier it is to sell homes at scale.
Yeah, and now I know that also when we start taking a look at the quality of the parks, what's really the main reason why we're shooting for 3+, 4-star park communities?
In a good economy, you're able to attract the highest, I call it the cream of the resident pool. And then in a poor economy, when people are kind of moving down from a more expensive housing solution to a more affordable housing solution, you're able to attract those if you have the highest quality.
Yeah, and I think, execution risk increases dramatically as location becomes less desirable and as the quality of the asset decreases as well.
Yeah, totally agree. Higher the quality, better the location, the more stable it's going to be.
Awesome. Well, great insight, Jack. Thank you so much for covering that. And to the audience, as always, thanks for joining us again today, and be sure to join us again next Tuesday for another episode.